All right. Good afternoon, team. Hope you're all having a wonderful Sunday so far. I hope you had an amazing weekend and are ready for this week's wild, volatile week. There's going to be a lot that's happening this week. Although this is a short meeting, we're going to cover some major events that are happening this week that are going to affect the market. I would like to start off with this weekend's news here. Biden drops out on Sunday. Announces on Sunday that he drops out of the 2024 election and endorses Kamala Harris, exiting race in best interest of the party, country, Biden says. And the market ended up having a gap up. So we came into the market with a nice gap up on that news. Although we are selling off a little bit here, we did have a nice gap up here, as we can see on the futures markets. Let's go to NASDAQ's QQQ as well. NASDAQ also had a gap up from 19,700 and peaked all the way at 19,841. It sold off halfway back down, but bulls are holding and are likely going to step in and likely push the market up early into this week. So we will take a look at the market analysis, but because this is a developing news that just came out, Biden dropped out so late in the race, although there has been other presidential participants that have dropped out. It's never been this late into the elections, and it's a bit odd. So the DNC convention date, the deadline for the Democratic National Convention is on August 19, and this is when they would have to choose a nomination. So there's going to be a lot of turmoil in the markets, but we do have some dates where we can anticipate, where we can expect the nominations to take place. So whether it's going to be Kamala Harris, whether it's going to be Gavin Newsom, or whether it'll be, I'm also seeing Michelle Obama and also Shapiro as well. So there's a great chance that the Democratic Party is going to choose Shapiro, but we'll see. Honest to God, I'm not really a politics kind of person, but I will be looking out for this and seeing what will happen. Now let's take a look at the heat map for this week, team. So far, it has been a very bad month for July on tech stocks. Apple's down 2%, Microsoft down almost 4%, Nvidia's down 8%. Google's down 4%, Meta's down 4.25%, AVGO is down almost 8%, and we can see a lot of these red stocks here are from the tech. And Amazon's down 6%. If we look at a lot of the green, their financials, some utility stocks as well, and also healthcare. Now, healthcare and financials still look good. They haven't dropped much, but they are looking to drop heading into the following weeks with the way that they're looking, which we will look at. Look at the setup shortly. So let's take a look at this week's major U.S. economic reports and Fed speakers. For Monday, we don't really have anything, which is very odd. We don't usually see that, but this just means that whatever price action shows us will be the actual movement. So there's nothing that is going to influence the market on Monday unless we get some updates from some developments from the elections. There's not going to be anything else that can affect the markets. On Tuesday, we got existing home sales. We got S&P Flash U.S. Services, the PMI data. This is important. On Wednesday, we have new home sales, so not much going on. Now, on Thursday, we do have the GDP data, and the GDP estimates are higher, which means the economy is more active than usual. So it's going to be very interesting how this will affect the consumer stocks heading into this this earnings season. We'll take a look at the earnings, the stocks that are reporting earnings as well. We have durable good orders at 8:30 p.m., which is 5:30. These are all coming out pre-market. And we have the advanced U.S. trade balance in goods. This is going to be released as well. So all of this data is coming out pre-market, and then that takes us to Friday's session. For Friday, we have the PCE data, which we know greatly affects the markets. And it's going to be very interesting because the data has been coming in lower and lower. Now let's go take a look at the earnings season. So for the stocks that are reporting earnings, there's a lot. So we have Verizon reporting on pre-market on Monday. There are some other stocks, but the most important ones that I will be watching are Tesla and Google earnings. So we have Tesla taking place on Tuesday after market. We have Spotify also that's taking place on Tuesday pre-market. We have UPS reporting Tuesday pre-market as well. Coca-Cola. The only stock that I'm really paying attention to for this particular, actually I will be paying attention to Visa as well. There are 3 stocks that I will be paying attention to. You can go ahead and screenshot this if you want. And if these are some of the stocks that you're watching, You can go ahead and screenshot. But most importantly, the ones that I'm watching for this week are Tesla, Alphabet, and Visa. These two as well, but these two only for opportunities. But these three are going to be key. And then heading into next week, this is when we have Microsoft, Amazon, Apple, Meta. We have all the good earnings that are taking place next week. So these two right here, Tesla and Alphabet, are going to give us a good if these two earnings come out good at the level that we're at in the markets, then that will be really great for the market, because we can finally get some sort of relief rally. So if we take a look at the S&P 500 here, we are currently up over $1 after hours, and we are trading right over here. So we're trading right here at the mid, kind of like the 50% retracement of Friday's red candle, and we are trading inside of this bullish channel here. So the bullish channel has not yet been lost. Bulls are still maintaining the uptrend. We have been going from support, resistance to support, and then to resistance, then get a nice digestion there, test resistance again, and now here we are back to support. So are we going to hold support here and create a bullish engulfing on Monday session and push back up above 552? If we push back up above 552 and with a bullish engulfing, I would anticipate that we can also get a nice move on Tuesday as well as Wednesday as well. But really, what's going to be key for this week is going to be the Tuesday's earnings. So we have Google and we have Tesla. Those two are going to be key for where the market is at this critical level. If the earnings on those two stocks are good, then we're going to see momentum. We're going to see positive sentiment return, and possibly maybe even retest all-time highs, fill that gap before we head into the next week earnings. The main target, if earnings are good, the main target that I'm looking at, the main level of resistance for me is going to be 559. I think this is going to be a key resistance level, and unless we get some good earnings next week, there's really nothing that can push the market up above the current levels at the current levels at 560. So I think this is going to be major supply, and until then we will see what happens. For now, let's say heading into Tuesday session, right? Let's say the market is very oversold and Monday is green and we go up to, let's say, 552 level. If we go to 552, then heading into Tuesday session, if earnings are good, then I'm going to anticipate a retest of 559 on that big earnings, basically big sentiment where the market will go up. And if that's the case, then that will be my target. So again, if earnings are good on Tuesday, I'm going to target the 559 level right away. So if we are trading at 551, that gives me an $8 range that I will trade towards this level of resistance. However, at 559, I really anticipate that the market will hit a major wall and will not be able to push higher. Team, it is really important that you do understand heading into this week, I'm not really bullish at all. Like, I went over my whole watch list. You can see I went over everything on my watch list, and there's not a single good stock that I could find. And the reason why is because the markets are at very overbought levels, and I'm seeing that investors are de-risking. So if you are not doing that, you may see some downside on your account over the next 2 to 3 weeks. We do have Powell speaking early August, but it's nothing about the FOMC. The FOMC is on September 19th, and that's in a long time. So that's in like 2 months. So the market will have 2 months to kind of go up a little bit and then just see a massive correction on this bullish channel here. And I think it's very likely that we can see it, especially with all of the uncertainty that we are seeing in the markets. So definitely be careful and make sure you are de-risking positions. Now, team, do keep in mind, even if you are not one that is good at buying puts, that's totally fine. You don't have to force yourself to buy puts. However, you do need to make sure that you don't have excess risk in the markets. The reason why this is important is because if you are, let's say, if you have a lot of exposure to tech and you have a lot of options, and this is something that I really wanted to talk about in today's session, especially heading towards the end of the session, because I really want to make sure that the team will will take my warnings here, will de-risk just like what I'm seeing with investors de-risking and protect their capital so that we can buy the markets much cheaper, especially after the uncertainty is out of the way. So looking at the S&P 500 here again, team, we can see that a lot of volume has been shedding off, and it is possible that we can see a move back up towards the 558 to 559 levels if earnings are good. If earnings are not good and earnings are mixed, then I would anticipate this being some sort of consolidation here before we see more downside. So this would be a drop base, and then that would lead to another drop towards this gap fill here at 531. Now let's go look at QQQ here. QQQ, which is the tech dominant sector. This sector is also inside of this bullish channel, but because tech was so strong and so overbought over the last 2 weeks here that yes, we have sold off and we got a great sell-off over the last 2 weeks, especially over the last week. However, there is still a lot of downside room to go before we test this, before we test the bottom of the bullish channel as shown on QQQ. Now, the bottom of the bullish channel very, very well aligns with this gap fill here at 460, 467. Now, I had a good feeling we wouldn't touch that gap on Friday session, and I bought a call for the team right at the retest of that level at 474.03. So once we had a bullish engulfing candle right here on this candle, that's where I got the team on the August 16 QQQ call for 495 QQQ call that we are holding, and we will be selling that call heading into this week as we get a possible correction back up. So team, this is what I'm seeing on QQQ. We are at this level of support here at 474.03, and there's a good chance that the market can move back up on this kinetic rebound off of this support level and move on to retest this resistance at 488, and maybe even try to go up a little bit more past that. But I really don't think that the market has the liquidity or the fuel to try and go up that much. And if we end up, let's say if we end up showing weakness, let's say heading into this week, we end up showing weakness and earnings really report mixed mixed earnings, such as just having mixed earnings like we saw with Netflix, such as the Netflix report, then this can create some sort of shoulder here where we would see a high here, right? And then we see a lower high, and that lower high would create a suspect for a potential, would create a heavy threat for a breakdown below this support level at 474, and then head down to this level here to create a new low. So this is where the zone was, and so far what we have here is we broke that low there. So here's how the market was moving. We had higher highs, higher lows, higher highs, higher lows, higher highs, and this was supposed to be the higher low, and then followed by another higher high where we make a new high, just like how we broke the resistance levels every time. But instead what we did was we created a high here, then we placed a low, let's just say a higher low, but then we had a lower high there. So the fact that we had a lower high and then that was followed by a lower low there tells us that the trend on the smaller time frames is changing from bullish to bearish. So let's take a look at what this trend change looks like on the bigger time frame. Sorry, on the illustration here. This is where we are at currently. We had bullish to bearish structure change right there, and this is how the market moves. So you got higher highs, higher lows, higher lows, and then higher highs, and finally you see equal highs over here. You don't see a higher high. And this usually means that the market has hit a ceiling and is ready to sell off. So now what we are seeing is we saw this lower low, and heading into this week, are we going to see a lower high? If we see a lower high where we reject the regain of the 20 EMA line, then this would mean that we have placed a lower high, which is a bearish characteristic only found in downtrending markets. Okay. Green, so what is our stop loss for QQQ? Is it at 474? Yes, sir. Our stop loss for QQQ is going to be right here at 473.50. If it goes below 473.50, we are out of the trade. We no longer want to be part of it. So far, we're up over $1.50 after hours, but that is our stop loss. We're currently trading at almost 477 there. So yeah, team, are we going to see a lower high this week? If we see a lower high anywhere around this range and the market shows weakness, and this is why I'm saying if tech earnings comes out mixed, then this can be a potential trend change here, and this trend change here is also like if I go here, is also the anatomy of a head and shoulders. So let's go take a look at what a head and shoulders looks like, and it really does not look good. We already got this double top firing down, and now we're setting up a much bigger. Let's take a look, team. Give me one moment, please. Let me find it. Should be up here somewhere. So this is what we have so far. Are we going to see this this second shoulder there? Are we going to see that second shoulder and see a big sell-off back down? Or are bulls going to report? Or are we going to have positive earnings from Tesla and Google, where buyers will step in and push the price all the way up to 488 and then begin to consolidate there? If we can see a digestion, then that will be good, because that tells us that bulls will be waiting for further earnings on Microsoft, Meta, Amazon, and Apple next week, so that if it is good, they can move back up. But the chances of that happening, I think, is low. And I strongly believe that the market, just taking everything in and seeing where the market is currently sitting, with all of the uncertainty that's happening, I think investors are going to de-risk and sell their positions, so that they don't have too much risk in the markets. So this is looking like a head and shoulders, and the head and shoulders can really sell off all the way down to 442 level. It may even fill this gap here. I think at 426 is where this head and shoulders pattern can really play out. So if that turns out to be the case, that's something that I'm watching for on QQQ. Now, do keep in mind, we are still inside of this bullish channel, and on the bigger time frames, we are still somewhat bullish, because we only have two red candles there. But do keep in mind, another thing that's also that's making me nervous is this pattern that we are looking at here on this three candlestick pattern, this big breakout, this demand candle breakout, and then this fake out candle followed by this big breakdown, looks like this particular three candlestick reversal pattern. It's known as an evening star, and here's how it looks like. You got a big demand candle followed by a doji and then a big breakdown candle, and whatever consolidation that we get from there, as we can see. So even if we consolidate for the next 2 to 3 weeks, there's a great chance that it can follow through with more downside and really send prices down. So I will be watching that heading into this week, and this is why I'm going to be very careful for the next 2 weeks. I'm not going to be participating or buying the dip. I'll be patient, because I believe that there can be some great opportunities, especially with this uncertainty that's hitting the markets. Volume was very strong as well. The volume on that sell-off on the breakdown is overwhelming. So there's a great chance that we will continue to see more downside with traders being very aggressive towards the 455. So 455 is a very high probability on any weakness in the markets. So heading into the second half of the market, if we are weak, this is something that I'm expecting for us to be targeting at 458.39. So yes, sir, it's a bearish engulfing as well. So very big candle, and I'm really not a fond of these supply candles. I know that we took out this supply candle, but this time it's a bit different, because it doesn't look like we have the fuel, and the RSI already had its melt up operation, and now we are below the 70%. So in other words, what I think is going to happen over the next 2 weeks is it's going to be a sell the rip market, which means whatever rebound we get will likely not sustain and follow through with more downside. Now, looking at the Dow Jones Industrials, the Dow Jones had a massive fake out candle. We peaked at 413 and sold off all the way down to 402, which is a massive candle. And usually this kind of move is it doesn't just shut off right away. I think this is going to possibly follow through with a big red down bar, where we go down to 395 and sell off. If we go to the daily chart here, it looks like we are overbought, and I think the chances of us going down and retesting this space here is going to be high. Now, at 395 is where I expect bulls to show up, but at the moment things are not looking good for the markets, and I think with all of the portfolios of the market being at these very overbought levels, there's a great chance that the markets that participants are going to de-risk. Let's take a look at IWM here. IWM also very overbought, and we are very far away from the 20 EMA line. So traders are going to target this particular resistance level as a safe haven to come back down to this level here, and pretty much this is where they're going to I think this is where it will slow down on the sell side. So whatever rebound we get on IWM, you can either take August 16 puts, or perhaps you can choose some expirations on your own, based on your own analysis, or based on your own approach and your own trade style, to take advantage of this weakening sentiment from the markets. So again, team, IWM, any rebound that we get, be ready to short it back down, because we're going to see more downside on it. Same with the Dow Jones Industrials, and same with QQQ. So QQQ being at this level of support here can potentially see some upside, but do keep in mind that Let's take a look at the last time we got below the 20 EMA line. You can see the last time we got below the 20 EMA line, this is where the TTM squeeze also had been very, very overbought and really showing that it was overheating. You can see the squeeze fired here, and it didn't go to red. So when the TTM squeeze goes from big solid green bars and then goes back to light red bars, this means that it's in the cool off phase. So if they're cooling off and price is not coming down, this means that bulls are very, very strong and there's a lot of fuel remaining. So once the TTM squeeze transitions back to solid green bars, this means the squeeze is back in motion and they're going to push higher. And you can see that we have been doing that over and over and over with no flush to the downside. These flushes to the downside are necessary because this is what flushes all of the sell orders from the market. So we have seen that we did see that in the market. We did see a lot of sellers getting flushed from the markets, as we also saw from the heat map here, with tech really leading this downside in the markets. QQQ is a tech dominant portfolio here and a tech dominant ETF, and these are the leaders that pretty much pushed the stock down. And if you guys have been to my YouTube channel, you know that I said if the market shows any weakness, you should be ready because QQQ is going to lead the downside on this market. Matter of fact, we even gave out a warning. We gave out a PSA announcement to our wonderful team, public service announcement. We said that once IWM and DIA reverse back down, QQQ's tech will lead the downside correction along with SPY. And that was posted on July 16. July 16 is right here. And I do want to share this tip with you, team. If you have been profitable heading into the future, if you have been greatly profitable, and I know that so many of you were profitable, if you are greatly profitable, you don't want to be selling on the reversal. You always want to sell on the strength. Selling on the strength is the best thing that you can do as a trader. And if you did that, if you sold on the strength, you did really, really well if you took that warning, because you can see that QQQ definitely did lead the downside. And so far, although we are at a level of support, we haven't seen a big reaction rebound. And the reason why we didn't see that on Friday's session is because of all of the bulls that were trapped in here. Now, when that happens, team, when bulls get trapped like that in the market, what tends to happen is once their stop losses have been triggered below 490, they have to cover their long positions. And when they cover the long positions, they have to force sell their stock holdings. And when they force sell their stocks, this is what we see. We see that consecutive downside for pretty much heading into the very close of the week. Now, there are times where you see the covering heading into the last 30 minutes of the market where you get a big rebound and it turns into like a like a bullish hammer candle, as we saw here. But that just was not the case for this Friday. So it is going to be very interesting. I do want to note, when this happens, you want to be buying on Monday because that's when they're going to step in and really cover long. So QQQ could get a rebound off of this kinetic support level, but please do note that we are expecting more downside with the RSI reaching 30% in the upcoming weeks here on QQQ. All right. So now that we have covered QQQ, and again, team, we are anticipating a short-term rebound, but please do note on any weakness, we are going to anticipate further downside on QQQ towards the 450s. 450s will be our next target, and if 450s doesn't hold, we go all the way down and fill this gap, which very, very well aligns with this 200 simple moving average, also known as the home base. So the 200 simple moving average is known as the home base. And again, if we do sense that weakness, this means that we are going to see that big flush in the market where the squeeze fires to the downside, flushing all of that sell energy down. Again, same with DIA, looking very weak, looking like we will see more downside. IW as well. Now, let's take a look at negative SPY. Now, negative SPY here, team, is the inverse of SPY. And there's a strategy that I have shared with the team. And the strategy is whenever you see three squeeze firings that has failed, we saw one here that wasn't able to sustain an uptrend. We saw another one that wasn't able to start a trend. And then we saw more failures here. Now, do note that looking at this negative SPY chart here, it looks like the dips are going to be the rips are going to get sold. So 560 is going to be major level of resistance, and I think as long as bulls hold above as long as bears maintain the 560, maintain price below 560, they're going to get more downside. So the reason why this looks like this is because this is the inverse of SPY, and just looking at the inverse of SPY for psychological reasons, it looks like it looks like it looks like we're going to see more downside. So definitely be careful, team. Uh, we will be seeing more downside. I think we will be potentially seeing more downside in the next 2 weeks if there are any mixed earnings reports. Now that's about it, team. I don't really have much else to share. There are some stocks that I'm watching. L is one of our holdings, and L looks like it could see some upside. ISRG could be a good bullish momentum trade on Monday session. I think ISRG on good earnings report can see a squeeze operation tomorrow above 449 here, as we saw at the above this breakout. And I think this can see another green day tomorrow. So eyes out on ISRG for a bullish momentum trade. NKE is another stock that I'm watching, and I love that the candles are getting very small. And whenever the market pretty much has a good correction, I'm going to be buying NKE long because I think the stock is very overbought here. Let's take a look at CME for Christopher. CME looks like it's digesting. It doesn't look too bad, but if we need to, we will de-risk and get out of this trade and come back another time. Now, team, I do have a put trade opportunity. I am looking at Walmart January 17, 2025. I'm looking at the 70 put here, at the money 70 put for this expiration. So let's go over the January 17, 2025. I'm looking at this put trade, currently trading at 3.0. And the reason why I'm watching this put is because we have a bearish divergence where the RSI, the relative strength index, is weakening while the stock is going up. So eyes on Walmart here for a nice correction back down, because this stock has been going up nonstop with no correction in sight. So we have this bearish rising wedge that I think is going to correct prices back down to at least 61 in the next 2 months here. So yeah, team. For NKE, looking at NKE here, NKE does look good. The stock does look good down here, and the leaps are very cheap. Please avoid buying any short term. I did see a question in our Discord where our team said, let's take a look. So our team said, oh, sorry, not this one. Brian said, so you don't recommend out of the money call options, always buy ITM. Now, we don't always have to buy ITM, but the more in the money of an options strike you buy, the safer and the more durable the option is going to be. Now, you do want to, if you do buy out of the money options, you are going to have to give yourself time. So the meta that goes with far out of the money options is time. Okay, so don't forget that you need a lot of time. You need time on your contracts to be able to play these out of the money options. You don't want to be trading far out of the money options that don't have a lot of time. Also, team, I did see something from one of our team that I'd like to discuss, and the reason why I would like to discuss is so that no one else does it. Now, I'm managing one of our team's accounts, and I'm helping her. Basically, I'm helping her somewhat to so that I can help her do good. You know, she's been losing quite an amount over the last 3 months. Reached out to me, and I've pretty much been managing. I've been helping her. I've been helping her pretty much guide her account so that she can recover. And what I saw from her account, just watching her in the background, is she would be getting a lot of these positions, and this is something that I really don't recommend for our traders. The reason why I don't recommend this is because this is very dangerous. For example, I'll share, okay? If the market opens and, we have to be, we only have a very limited window to close our positions. And if the market, let's say, goes up and you have all of these positions, how are you going to close them, or how are you even going to be able to comprehend selling these positions at the best prices that we want to sell them at? We won't be able to. We're going to get disoriented, and I think this is very dangerous. So for those of you that are in the learning process, please do not be shy, okay? Do not be shy, because we were all here at some point. We were all at this exact point, at some level of our progress. So I would like to bring this awareness to you here over the next couple of weeks. You do not, especially over the next couple of weeks, you do not want to have that in your account. only have a few positions so that you can manage it and also have a great risk management. So if you have all of these positions, something that I remember with me doing that back then was that I would be disoriented and I would not be able to focus on where to cut my losses. And there was a point where the account would go down so much, and I would end up just capitulating and not knowing what to do from there. And what capitulating means is that you leave your faith to the market, and that's a horrible thing to do, especially if you have far out of the money expirations that don't have a lot of time. Does that make sense so far, team? So please, if you have this on your account, take that from me and no longer do this. Okay. The most you want to have, the most options trades you want to have on your account is 2 to 3 trades. No more than that. Okay. Because if you have 2 to 3 trades, it is going to greatly help you manage. And another thing that you want to do is, let's say there are several admins in a group that you're part of. If there are several admins and one admin has, let's say, a few positions of that, and then another admin has a few positions of that, you don't want to be holding trades from all of the admins. The reason why this is a bad thing to do is because it amplifies your risk. If that admin is holding a few calls and this admin is holding a few calls, that is going to really amplify the risks on your account if you have all of them on your account. So you want to be very selective. And if you're new to our Discord, that's something that I expect you to do, or that I hope this awareness helps you do, so that it protects your account and you're able to manage your positions much better, and you don't get disoriented and you don't capitulate on your account. Just have several positions, have 2 to 3 positions at the very most, and that'll greatly help you manage it. You'll be able to sell it at the best price, and you'll be able to get out when things go wrong without having to get disoriented. So far, so good, team. Let's take a look at Lulu. Micah, I was not happy to see Lulu. I was very, very disappointed. Lulu does not look good, but it is very, very overbought. So I will be looking to see how this develops throughout this week. The good thing is we don't have any earnings report, and we have plenty of time. So the fact that we have plenty of time for the next this contract here for Lulu expires in January 17, 2025, which is plenty of time in my book. So I think we are good. I think we're good for now, and let's see how it goes. Let's see how this week goes. We'll continue to watch it, but Lulu is definitely very, very oversold. Be picky about 2 to 3 positions as well. Like Ryan said, team, you want to be picky about those 2 to 3 positions that you're going to hold. I promise you, if you do that, you're going to do so well. You're going to message me in a couple of months and say, I want to thank you so much because this has influenced my account to go from this to that. So that's what I want to see. Okay, team, please avoid buying tech stocks, avoid buying tech options, tech call options for the next couple of weeks here, and really take things easy. Okay, protect your account and only day trade or swing trade with just very, very small positions, very few positions. And team, another thing that I also notice is like some traders will end up buying options like this just because it's cheap. And I don't want you to do that. For example, a trader will pick up a 545 put trading at 0.60, or, something far out, trading Intel for, $15. This really adds up. For example, this is $70 with 2 contracts. That's, 60, that's $140. And then this is 2 contracts. That's $30. 5 contracts here. That's how much? That's, 30, 60, that's over, that's almost $100 there. That's 90. Yeah, that's $115. So things like that really add up. Okay, team. And you don't want to do that. Okay. You really don't want to do that, because these little small amounts add up to really damage the account. So avoid doing that, because there's a reason why they're cheap. The reason they're cheap is because they're very low probability trades, and it's not going to be overall, over the long run, it's going to really drain the account. So avoid buying these contracts just because you want to trade. Take it easy, look for opportunities, and buy much more durable contracts that, they're expensive, but they're expensive for a reason. Would you suggest doing puts on tech? Dave, I would say yes to that, but I don't know if right now is a good time. Matter of fact, I think this is a sucker's place. I call it the sucker's place to buy puts here because we have already sold off. So unless we get some sort of rebound, it is a sucker's place to buy puts because with just with any relief rally, they're going to be really really red on their positions. So give it a little bit of rebound, and then yes, I think it'll be a great idea to buy puts. Matter of fact, looking at MU here, MU has a potential. Oh, it already fired the bear flag. So we had a bear flag set up here, and the bear flag played out really nicely. And it looks like we are heading towards this level of support at 107 soon. So again, team, you want to be trading less with quality trades, okay? Please take it easy for the next couple of weeks and try to avoid having too many positions so that you don't get disoriented and you don't capitulate on your portfolio. And that's all for me, team. I really don't have anything else to say. I just wanted to share where the market is, what we are expecting, and how the team can be protecting themselves by doing these things here. Are there any questions so far, team? Anything I should cover? Any questions? Anyone want to step in the mic or say something in the chat room?
Yes.
Hi, how are you doing?
I'm good. This is long range. I was losing money until I find out about you from my friend, and I've been trying to follow you for like 2 weeks now, and I was seeing the money, but I got money tied up now in AMD. Seeing you buy one, I buy 2 contracts, but I'm scared that I'm going to lose it. So what do you think about the AMD? Do you want us to sell out in the morning, or what do you think about it?
I would like to say thank you so very much for joining our team. We're very happy to have you on our team, and we hope that you learn plenty from us and you also contribute to our wonderful team. So far, AMD is not looking good. Honestly, looking at AMD here, here's what I'm expecting on AMD. We have a potential bear flag here, and yes, AMD can get a nice rebound, but I think the rebound is only going to create liquidity so that it can get another leg down to 115 area perhaps. The reason why I say that, maybe I'll be wrong. Maybe I'll be wrong, and AMD will rebound really really big, especially considering the sheer sell-off that we have experienced over the last 2 weeks. But just looking at this particular chart here, and looking at the current market conditions, where the market is and how much QQQ can sell off, I think there's more downside to go for AMD. So the reason why I say that is, let's go over the XLK, which is the technology sector of the S&P 500. The technology sector of the S&P 500, you can see, if you guys remember in the earlier session, I talked about the trap traders, the traders that were bullish and got trapped in the market, and that was the reason why the market had to sell off. And basically, the participants of the market who got trapped now had to cover their long by selling stock. So when you cover long, you have to sell stock, and this led to some heavy bloodshed over the last 4 weeks here. Now we are at this level of support, and so far we're trading at 221, which is just around here, and they can regain this particular support level and get a rebound tomorrow. However, do keep in mind that the rebounds will very likely create this head and shoulders and see more downside towards this gap fill here at the 195 area. And if I go to analyze here, AMD is the 5th one on this list. We got Microsoft, Nvidia, Apple, AVGO, AMD, and if this particular sector is going to see more downside, then we are going to see more selling on AMD. If you have some positions at the moment, and are you red on them? Are you big time red on the positions? How are you looking so far?
I'm not. I think I'm down by 20% right now because I put
okay.
On. So yeah, I'm not bad. That's why I say if it's gonna go the other way, then I might well go ahead, close them out, and then kind of watch outside. Because I don't want to lose. I did gain good last time you tell us to go in. I did get a bit of good money. So when you go back in, I went back in with you. So we kind of amazing. Around. When you go in, we go in with you. So
that sounds amazing. That's really awesome. And I think AMD will likely retest 159 area, 160 area. So it'll be the about the 50% retracement of this big bearish breakdown. AMD is definitely very oversold here. So it is possible we can get a rebound this week, but use that rebound to either get out of positions, or if you're in it, one can get out of the positions, or if anyone is going to take advantage of this potential rebound, be very careful and please try to get out. Because it just doesn't look like the sector is ready. If we do see a big demand candle reaction, that will be really nice. But so far, so far it looks like we will get a rebound again towards the 160s, but it just doesn't look like they're going to get a big rebound. So use that opportunity to either take advantage of some short-term calls to profit on the day trade, on if you do see that price action is there on the 5-minute time frame, or use that rebound to get out of the current existing positions. For Pan W here, Pan W, I was looking at Pan W earlier today, and that stock also does not look good. Although they have been holding up really well, it just doesn't look like I think the timing of the market doesn't look like it's going to get much upside. So I would honestly wait this out as well, especially considering that we have a second retest there, which means we could go down, see some downside, and then perhaps come back up to further retest it, and maybe we will set up a potential cup and handle formation there. But so far, it doesn't look the best. It doesn't look the best considering the current market conditions that we are in. Now, going over Coin Team, Coin looks amazing. Coin looks very amazing. Matter of fact, I would say this will be a great momentum trade heading into Monday session. Oh, you know what? Who mentioned that? I wanna send you a thank you, Pine. Thank you. Thank you for mentioning crypto team with Trump saying everything positive about crypto stocks might absolutely skyrocket from here. So definitely do pay attention to Coin has all of the pretty much all of the qualifications for a massive melt up operation. So definitely, sorry, not a melt up operation, for a massive squeeze. Definitely watch Coin here. We have a bullish engulfing here where bulls clearly took out the big bearish supply bar, the big bearish breakdown, and we are trading right at this level of resistance at 258. Once we break this level of resistance, the stock is going to explode towards 283 and then head towards the 300s. If you don't know, team, Trump has been saying a lot of nice things about crypto, saying that crypto needs to come to America, China's competing with us, and all of that positive stuff for crypto. So if we go over to BTC here, we can see that BTC is doing really well. It's inside of this big digestion. So why is this important? Well, the reason why this is important is because we had a big rally, we have a base formation, and that base formation basically digested this big expansion that we had. So now we have had the contraction, and we saw this clear demand reaction with a big gap up, and so far we are trading above the 200 simple moving average. The fact that we are trading above the simple moving average and we retested the support at 56,000, the next level of resistance that we are targeting for on crypto is going to be 72,711, which is the resistance level of this big zone here. So once bulls do break that level of resistance at 72,000, this can run really hard. So do keep an eye out on Bitcoin, on crypto related stocks. So for Mara is also digesting here. It doesn't look so bad. Let's take a look at what else we have, team. Give me some crypto stocks. Yeah, Riot, not one that I like. I'm not really a fan of Riot. It does have these big moves, and it's just one of those laggers. It doesn't really it doesn't move on time. But do keep an eye out on Coin and Mara. I think those are going to be great ones. Another one is MSTR. Oh my gosh. And the best part about this stock is they have a stock split on August 8th, and the fact that they have a stock split tells me that just like whatever we see, over the last couple of months here, the last couple of quarters here, we have seen any stock split leading up to major rallies until after the stock split. Once the stock splits, then we start to see the pullback. But this one looks phenomenal, you guys. MSTR looks very great, and I'm targeting 2,000 next on this breakout here. We have a breakout above 1735, and we have a beautiful demand candle above that breakout. So it's a good momentum trade heading into this week, heading into the next 2 weeks. For LLY, I'm honestly not sure how to feel about LLY. LLY got some news that led to some major downside. We do have a bullish Harami reversal candle there, but I'm not sure how to feel, to be honest with you here. May or may not get some upside. It looks like high risk for me here. Let's take a look at Crowd here. Now Crowd is trading right at this level of support. It is definitely trading at the oversold territory. but I'm not sure how to feel about this one either, despite being at a level of support. I think the chances of this, matter of fact, I think the chances of getting a rebound here is very high. The reason why I say that is because we are so overbought from the 20 EMA line, and usually we don't get this far extended without seeing some sort of correction. So if I go back to any other period in history, when we really get this overbought, we always correct back up to the 20 EMA line. So whether it was here, down here, where we came back down to the same level of support, they always, one way or another, correct back to the 20 EMA line, and depending on how the reaction goes from there, all depends on the sentiment there. But for now, the chances of a rebound on crowd looks very high. The first target can be 316 on the dip buy. So if you do end up buying the dip, perhaps you can target 316. But yeah, definitely very, very oversold on crowd, and I would not be shocked if we do see a nice rebound. Let's take a look at NVIDIA here for Tim. Now for NVIDIA, I'm really, I'm not a fan of this because this looks like a bear flag to me. And I do want to note that, let's take a look, team. Give me one moment here, okay? I'm going to pull this up. I did see that Jensen sold over, I believe, over 30 million stock shares. So let's take a look. Either it was 30 million in value or 30 million stock shares, because, you know, he's a very, very wealthy man. And let's take a look. Let me go over, let me get that screenshot for you, team. I watched it on one of the YouTubers here. So here it is. Take a screenshot from Justin, one of my favorite YouTubers. So, all right, here it is, team. Now let's take a look at NVIDIA. NVIDIA CEO Jensen sells $30 billion in stock amid insider selling frenzy. The stock is really selling off, and this just adds more fuel to the downside. What I'm seeing on NVIDIA, and I have been telling our traders to be bearish on NVIDIA ever since this big bearish breakdown candle. What we can see is whatever rebound we get, team, is going to just be that rebound is just going to be a potential bear flag, I believe, for more downside to go on NVIDIA, perhaps towards either this level of support at 106, and if 106 doesn't hold, then that prior breakout where major buyers will show up. I myself will be the first in line to show up if we ever go down to 95. If we go down to 95, that's a major buy signal for me. I will be more than happy to buy and hold long term, because that would be a great opportunity, and it would just put us back to where the prior the prior big rally was before the stock reported earnings. So if NVIDIA does go down there, this is what I'm looking at. Now, just looking at this chart here with my indicators and the RSI and everything, it looks like a bear flag to me, team. It looks like this. I'll show you, okay? I'll show you an illustration here for what this can be. Bear flag, there we go. It just looks like this right here, team. It looks like a bear flag. So if I were to remove all this stuff here, although we are at a level of support, you can see we have been at a level of support here for 3 days, and bulls are just not able to get that big demand to push. So I think even if we get some upside on this, it's going to see more downside. And the reason why is because this looks like a bear flag to me. So let me just go ahead and go to a new chart and remove everything here so I can draw it again. Here's what we have. We have this drop, and now we are seeing this base formation here. We're seeing this base formation, and the base formation can go even all the way up here to 124, but will very likely reject and then follow through with more downside, either towards 107 area or towards the 95, which I think will be an amazing opportunity for the long term. So another stock that was very similar to this was MU. If we go to MU, that's exactly what MU did. MU got some sort of rebound, as we can see, but the rebounds were just not sustainable and sold off right back down, and we saw that base drop. So if I go back to NVIDIA here, NVIDIA looks like it is going to create that bear flag, further establish that bear flag, maybe retest 125, but then eventually sell off. So let's take a look at more examples of bear flag. Now, here's an interesting fact, team. A bear flag is basically, it's one of the 4 formulas of supply and demand. So drop, base, followed by another drop. New Oriental, now EDU. EDU looks good. EDU looks good. We have a nice bullish engulfing, and it can see another green day this heading into Monday or Tuesday. EDU does not look bad. It can get a rebound here. Are you playing Bitcoin through Coin? Sorry, are you playing Bitcoin through Coin, Mara, or Riot? I'm going to play Bitcoin through Coin and MSTR, and maybe Mara too. Mara is Rainbow's favorite crypto trade, but I've never had good luck with that stock. So I'm going to leave it for Rainbow in case she decides to trade, and instead I'm going to focus on Coin, specifically Coin, because I have experience with Coin, and Coin looks amazing here. Coin really looks amazing here. So let me show you the last time something like that happened with Coin. You see, when we got this big demand candle and then we took out a level of resistance, that led to some beautiful upside. So the reason why I'm trading this team is because Trump said some good things about it. And the fact that Trump said some good things about it, and there seems to be a potential that Trump can potentially win this presidential election, especially after the assassination attempt. I think with everything he's saying about Bitcoin, this can be really good. So if I just pull up some Trump Bitcoin headlines, let's take a look at some Trump Bitcoin headlines. We can see like some of the things he's been saying. Trump's let's see. I'm not seeing any articles here, team, but I'm telling you, there's been a lot of positive things that I've seen Trump, especially on a video. I'm going to share it with the team, but to save you some time, I'm not going to do it now. I'll do it later on when we are in the chat room, when we're chatting in the chat room. I'll share the. Actually, I think one of our team did share it over the weekend, but I did confirm it on Twitter, and he did say it. He did say in one of the conference, he did say a lot of positive things about crypto and how he wanted crypto in America. Would you hold coin into earnings or not? I really don't know about that, Charles. For now, I just want to take advantage of this bullish momentum here. I do see that they have earnings on August 1st. I'm not sure if you want, you can possibly farm it, Charles. And what I call this, I term this, I term this because what I mean by farming is like you can buy a call just in case the stock goes up a lot, and if you decide to keep it through earnings, if you could, because first, our target, I think they're going to try and push towards 283 sometime this week. And heading into earnings this week, it'll all depend on earnings. So if you do want to farm a contract by buying it right here and then selling it higher on that earnings anticipation, you can. And if you want to hold it through earnings, you definitely could, since you invested into it. But I think just to buy it here and sell it to those guys that are going to be buying into earnings, I think it would be a good opportunity. Are you buying a call on coin or just buying coin stock? Now, buying coin stock would be good. That's a great option, actually, Ni. And I just want to thank you so much for joining our team, by the way. I'm very, very excited to see you in the mentorship classes. How's it going, Chef Mike? Thank you so much for joining. Chef Mike, you got any good setups? You have anything to share? Should we sell the shares we have to get them cheaper or just continue to dollar cost average? Ken, which shares are those? Are those regarding NVIDIA or I'm thinking that it was regarding NVIDIA? Not so much. Chef Mike, I went through my entire setup and I couldn't find a thing, man. I couldn't find a single setup. I'm excited to short Walmart, and I'm excited to play some of the crypto moves that have these beautiful setups such as Coin and MSTR. But aside from that, I'm going to be mostly day trading and doing short-term swing trades that I will share with the team. I'll be very, very active. And for the next 2 weeks, anything that I trade on my account, I'm going to share with the team. Should we sell some NVIDIA? Miss Ann, I think we may have to. Let's take a look at how this week turns out, but I think we may have to. Now, what I really would like to see is some good earnings reports. If we can see Google beating earnings on Tuesday, that will be really nice. If we can see Tesla beating earnings, that will be really nice. McDonald's, let's take a look at McDonald's here. McDonald's is consolidating, and I am seeing a lot of these restaurant stocks still doing well. I think this can be good. This can be a good trade towards 262 retest of that resistance line there. BMY, I did see BMY was showing strength. We placed a bullish hammer for Friday session, but I'm not sure how to feel about it yet. But honest to God, it looks really, really great. And if you do buy BMY, Brett, make sure you buy long-term options, because the long-term options are very, very cheap, and you don't have to worry about earnings, because even if earnings goes bad, you can just hold on to it, and it just won't lose a lot of value since you're holding long term. So you can either pick up. Let's take a look at even further. Since they're so cheap, I would pick up the 50 call. If you're going to trade it, you can pick up the 50 call for January 16, 2026 expiration. If you are going to trade this very, very overbought stock, because once they go back and retest this resistance level and fill this gap as the stock gets a relief rally, then it's going to give this contract um, for the January 16, 2026, the 50 call, great premium. So that'll be really great. CLX. Not sure how to feel about CLX here, honestly, Pine. It doesn't look good. Doesn't look like the best setup here. I'm going to stay out from it. What I would like to do is let's take a look at Apple here, team. I'm anticipating more downside on Apple. I'm anticipating more downside on actually Microsoft. Microsoft did fill this gap, and it is possible that we can go for this smart money retest here. It is possible we could go back and retest 450, but do keep in mind that after retesting 450, there's a great chance that we can sell off in this smart money concept. So what does a smart money job-based drop short signal look like? It looks like this. We have a drop, we have a base, and then another drop. And yes, we go back down to retest the big supply zone, but what happens is once we get inside of the supply zone, we look for a reversal candle so that we can get the short signal, so we can expect a new lower low below that prior low, which would take us to 415 on Microsoft. So if we do see a rebound towards the 448 to 450 area on Microsoft, that will be a great short position signal for more downside to be seen. DJT, let's take a look at DJT. DJT went up 6%. It did gap up, but I'm not sure how to feel about it here, to be honest with you. The reason why I say that, I know I said that a lot for a lot of stocks, and I'm saying that for a reason, team. I'm not seeing the right candles. What I would like to see is I would like to see demand candles like this. I would like to see demand candles like this, or candles like that, or candles like that, because we want to be moving with the smart money. We don't want to be the first one in line heading towards the fortress and dying in war. We don't want to do that. We want to get those demand candles, and only then we will push. That sounds very cowardly in the stock market realm, but sorry, not in the stock market realm, but in the war realm, because we would seem cowardly not to be the first one to push. But yeah, we don't want to be the first in line and just getting wiped out. So give it time, let them react, and then we will step in. I'm telling you, team, this is the best thing that you can do. If you want to increase your probabilities on weeks like that where we have nothing to look at, just be patient and let the market give you the opportunities that week so that you can trade it. So heading into this week, on Monday, we are going to react, and I will be there Monday morning. I will be in there, and I'll be trading with the team there. And any opportunities that I see, I'm going to alert. I'm not going to take any trades for the next 2 weeks or so without sharing with the team there, unless they're futures trades. Let's go over the sectors here, team. The only sector that really looks good so far is XLV, which is the healthcare sector. Let's take a look at one stock I want to see from the healthcare sector, ABBV. ABBV, it has earnings on July 25th, and I think this can see a green day tomorrow. So ABBV might be a good one to trade, but do get out before earnings. Let's go to utility sector. Utility sector does look great, you guys. Utility sector does look good, and I think this can get a good rotation where we head back up towards 72. So what are the stocks in the utility sector? We got NEE, SO, DUK, AEP, SRE, D. So let's take a look at D here. What's going on with D? D is also digesting here. So as we can see, these stocks don't look too bad and can potentially see a green day on Monday and Tuesday. Let's go over XLRE, the real estate sector. Real estate sector is breaking out, and so far we are still trading above the breakout, but it just looks like bulls may not be able to sustain it. I will continue to watch it, but I think XLRE may show some strength this time. XLP, consumer staples here. Consumer staples does not look too bad. However, it doesn't. I think the timing is off. It doesn't look too bad, team. but the timing is off. So let's take a look at some of the stocks here: PG, Cost, WMT, KO. And the reason why I say that is because if we look at Cost here, Cost looks like it's going to play out this head and shoulders and sell off down to 787 area. So looking at KO, also KO has been rallying nicely and it's reaching a resistance level. So unless they get good earnings as catalyst, I'm not sure how to feel about this sector, and I won't trade it for now. The communications and streaming platforms, so communications and streaming stocks such as Meta, Google, TEA, Comcast, Disney, Verizon, also breaking down below the 20 EMA line and showing strength and looking like we will see some downside. And this is why, team, this is why I didn't have anything to share with the team, because no matter what sectors I look, nothing looks good. You know, everything points to an all in out sellout soon. So I think we will get that very soon. I think the market will see some big correction, and I will be very happy to trade that correction. Bank stocks also got some bad news over the weekend with a lot of, I think, with more, you know, with banks showing some weakness. And we also saw Warren Buffett selling over 1.4 billion in Bank of America. 1.4 billion value in Bank of America shares, and financials just look like we will see more downside. This is why I'm confident that the market can see more downside over the next 2 weeks. And team, I think going down over the next 2 weeks will very well align with us heading into August as well as September. I think that correction will be an amazing opportunity for us to buy, just as the Fed cuts rates, which I think will really trigger some great upside in the markets. So if we do see that correction in the next 2 weeks, I'm going to buy heading into that 100% probability rate cut into September. There's a 100% probability on the rate cut heading into September in the markets. So the investor vote at the moment is 100%. Usually, you know, we would have it like 30%. We would have, let's say, a rate increase being, let's say, 30%, or, you know, and all of that. But this time, the rate cut is 100%, meaning almost everybody thinks that we are going to get a rate cut. And that's because Powell also said himself. And that's about it, team. I really don't have anything else to share. Let's take a look at two more stocks. We'll take a look at UAL. UAL does not look bad here. UAL does not look bad here. I would not be shocked if this does see more upside. It doesn't look too bad. Doesn't look too bad. VST. I'm sorry, team. I know I'm not giving out straight answers, and the reason why is because I don't want anyone to get trapped in any positions right now. There are going to be amazing opportunities in the next couple of weeks where we can move on from these lower probability setups to much higher probability setups within the next 2 weeks. So if you joined this session late, please keep in mind heading into this week, you want to be very light. You want to hold maximum 2 to 3 positions at most. You do not want to hold a lot of options. You want to wait for this correction to take place, or at least for more development from tech. If Google reports beat and Tesla also reports beat on earnings, then this will bring in a lot of sentiment in the market, and that's the only way we will trade the upside for the markets. So do you think August will be bullish for the market with the current Fed meeting on July 31st? I think we will see more downside heading into the first and second week of August, and then from there we will see a move back up heading into September. The reason why I say that is because the FOMC meeting where the Fed decides on a rate cut announcement, a rate decision announcement, is going to be on mid-September. I think with how everything is set up, especially with Powell speaking on the 31st, or the Fed meeting on 31st, I think that is going to be liquidity for the downside, because we have tech earnings, we have Apple, Microsoft, Amazon, Meta, all of these big earnings that are reporting on. 2 of them reporting. So Meta is on the 31st. Microsoft on August 1st. I think Apple's like August 2nd or something, and then Amazon as well. So Amazon is on August 1st here. Apple is on August 1st as well. Wow, very interesting. What about Microsoft? Is it on 31st? Microsoft is on the 30th. Interesting. So Microsoft on the 30th means it's on Tuesday of next week. So Tuesday of next week, Microsoft reports. A lot of these stocks are reporting earnings next week. This is why I think this week can see more downside, and then next week on good earnings, that's when bulls can possibly show up. And if that leads to more downside, then perhaps a week after all of the earnings have been reported, that's when the market can possibly bottom out or start to see an increase in demand. Thank you so much for today's session, team. Thank you for attending. That's all for me. I'm sorry that I was not able to share a lot of setups. For those of you that are new, just know that there's been times where we have had such amazing setups in the market. And unfortunately, over the last 2 weeks, we have not had any setups, and you can see why. And I was very honest last week. I told our team I don't have a lot of stocks to share, and I just don't want to trap you in any positions. And I was so happy that I said that, because look at the market selling off. So heading into this week, I'm telling you the same thing, that I think the market, despite getting some upside, could see more downside heading into the rest of this week. Pine, Starbucks looks amazing here, but I think it's going to be affected by earnings on the 30th. So it can see more upside tomorrow, meaning that the dip can be bought towards this level of resistance at 82. But I would be cautious and secure profits before earnings. Thank you so much for attending, team. I hope you have a wonderful rest of this Sunday, and see you in tomorrow's trading session as well as the chat room. I'm going to be very active, and if I trade anything, I'm going to send out an alert to get the team in as well. So take it easy for now. There's going to be a lot of developments this week, and we will react to it.